Well, on social media, a meme is a funny image or a video that's widely spread around the internet. But in the world of finance, it's a little bit different. Meme stocks are recognizable when shares of a company gain viral popularity and then witness massive price swings. In short, you might think of GameStop and AMC. They're among some of the meme stocks that investors have made popular in the past by forcing short squeezes. That, different definition for a different day for you. Now, this is just one of the many ways investors can get into the stock market, but our next guest says that you should avoid meme stocks as your introduction at all costs here. For more on this, I'm joined by Todd Walsh, who's the Alpha Cubed Investments CEO and author of Exponential Gains here. Todd, thanks so much for taking some time here. All right, you're advising against this being your entry point, meme stocks being the first trade that you make. Why is that?
Well, hey, Brad, thanks for having me on. We have a generation of investors around and under 30 that think in stocks like meme stocks, AMC, game stocks are investing when really they're speculation. We saw a lot of investors beyond Gen Z and Gen X chase a lot of wild stocks in the pandemic. We saw Peloton, we saw Zoom go up and then drop 90%. People need to have a foundation underneath what they're doing, an investment process that kind of weeds out the speculation and brings them more into investing. So that's kind of what the book's about.
Certainly, and I guess, as we're thinking about what the propensity is for certain thematic plays, especially among younger investors, what are you witnessing, what are you seeing, and where does it hold value versus where there should be a little bit more kicking of the tires on the fundamentals?
So we need to get away from the idea of making a big score and get a process in place that looks at revenues and earnings. If there aren't revenues and earnings, and if they aren't growing pretty well and appreciably, then we're probably speculating. And if we can educate people in general about the difference between speculating and investing, I think we're going to go a long way to creating a generation of successful investors.
Is DJT in a meme stock phase right now?
DJT, which one's DJT?
It's the Trump Social the Truth Social,
yes.
Excuse me.
Yes. Yeah. Sorry about that. It's only an election year. Who's thinking about this stuff yet, right? It's a little speculative here. I mean, let's be honest. There aren't the revenues to back it up. The first thing we do when we look at any stock is look at what are the revenues and are they projected to grow? Have they been growing? What are the actual earnings? Revenues is one thing, right? But we got to bring some money home and make some money on these investments. So we need to look at the earnings. And a lot of these stocks, there's a lot of hype around them. You mentioned DJT. We're still running into younger investors who are saying, once my AMC gets back to 40, I'm going to sell it. And that may not happen. So by getting a process in place, which is exactly what the book is about, create a process to separate the difference between speculating and investing. So the DJT you mentioned, you can speculate all you want as long as you understand that when you speculate, you might lose a lot or all of your investment. We're all adults, and if we choose to lose a little bit of money, that's fine. You can make a lot of money on some of these things too. But the core of what you're doing, especially for younger people, has to be process-based and has to be backed by good revenues and good earnings. Otherwise, you're just taking a big risk.